every market, look at the euphoria. The stock market keeps going up. Positive week for stocks this week. All the indexes, solid gains for Bitcoin. Wild, euphoria there. It's like the only sector of the market where people aren't excited is in the gold sector. In a bull market, when gold is that close to its high. And now here we are within 2.5% of a record high. Very good chance gold will make a new all-time record high in dollars next week. If not next week, maybe the following week. Gold stocks have a long way to go now to recover, not just from a correction, but they had an entire bear market. There's no confidence in it, which is one of the reasons that you should be so confident. Where other people are fearful, that's where you could be brave.
This past week, the gold market showed remarkable resilience, with prices rallying above $2,550 an ounce and closing strong. In the spot market, gold traded at €2,596.02 an ounce, up nearly 7% for the week against the euro. By comparison, gold rose to $2,701 an ounce against the US dollar, marking a weekly increase of over 5%. This rally reflects growing investor interest in gold amid global economic uncertainties. According to Peter Schiff, chief economist and global strategist at Euro-Pacific Asset Management, the current gold rally might be the beginning. However, the divergence in gold's performance between currencies highlights the dollar's continued strength, which has tempered gold's rise in US dollar terms despite significant gains elsewhere. The dollar index reached a three-year high of 107.5, buoyed by market optimism about US economic prospects under Trump's administration. Expectations of faster GDP growth, deficit reduction, and a robust dollar have driven this strength. At the same time, economic weakness in Europe has exacerbated the euro's decline, with the Eurozone composite PMI dropping to a 10-month low of 48.1. The disappointing data has increased market bets on aggressive monetary easing from the European Central Bank, further widening the economic disparity between the US and Europe. This divergence has created a unique scenario where gold sets record highs in foreign currencies, even as its rise against the dollar appears more modest. Bullion is clawing back losses seen in the immediate aftermath of Donald Trump's victory in the US election, which sparked a rally in the US dollar. Gold has gained almost 30% this year, and there are widespread expectations for fresh records in 2025, with Goldman Sachs Group Incorporated and UBS Group AG recently issuing bullish outlooks. Following these developments, Peter underscores the interplay between the strong dollar and gold's enduring appeal as a safe haven asset. While the markets view U.S. economic conditions as relatively stronger, he challenges this narrative, pointing to underlying weaknesses that remain overlooked. Now we present the clips of Peter Schiff's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I really couldn't tell much of a difference between the environment this year and the environment last year. I mean, there's just not a lot of excitement yet in the gold market, despite the fact that gold actually rose almost 4% on the week. It closed at 2,715. So back above 2,700, we're only about $35 below where we were when Trump surprised the markets, or maybe not surprised them, but Trump won, and that inspired a big rally in the dollar and a decline in gold. Well, gold has almost recovered all of that. In fact, if you look at its record high from a couple of weeks earlier, we're only about 2.5% below the all-time record high for the price of gold. And if you measure gold in euros or in British pounds, as a lot of people obviously do, because there's a lot of people that live in Europe or the UK, gold closed at an all-time record high in those currencies. And remember, gold was making all-time record highs in foreign currencies before it eventually started making all-time highs in the dollar as well. And I expect that to be the case. It's just lagging a bit due to the strength of the dollar. In fact, the dollar closed the week at about a three-year high, I think, in the dollar index. It closed at 107.5. The euro is barely holding on to a 104 handle. It got to as high as 112 not too long ago. And the entire rally in the euro is based on Trump winning. Now, I know we got some weak economic data coming out of the Eurozone last week, especially on Friday. The PMIs that came out were particularly weak. But, the U.S. PMIs have been weak, too. And so I don't think it's really the weakness in Europe. It's the expected strength in the United States that traders believe will be in sharp contrast to what's going on in Europe, because we've got Donald Trump, and people assume we're going to have a stronger economy. We're going to have faster GDP growth. Maybe he's going to shrink the deficits. We're going to have a stronger dollar. In fact, people think that tariffs are going to lead to a stronger dollar. I disagree, but that's what the markets perceive. So you're getting this strong dollar. But I think the markets are also overlooking a big factor, because the currency markets, I think, were still trading before Trump won under the false narrative that we had a strong U.S. economy, that we had the strong labor market. And that was part of what was underpinning this dollar, because there was a perception that the U.S. economy was in better shape than the rest of the world. And so the Fed would not cut as aggressively as maybe the ECB or the Bank of England or other central banks. But that was a false narrative. The fact that Donald Trump was elected in and of itself strongly suggests that that was a false narrative. Because if the economy was as good as the markets believed, Trump wouldn't have won. They would have elected Kamala Harris. The fact that they voted for Trump is an indication that the voters were not happy. The number one issue in the campaign was the economy. And because Trump won, that means the economy was bad. If the economy was good, Trump would have lost. But it's not just that. They're already starting the downward revisions, and nobody noticed.
Peter Schiff highlights gold's 4% weekly rise, bringing it close to its all-time high. However, gold mining stocks like the GDX and GDXJ lagged, down 13.5% and 14.5% from recent highs. This shows fear in the sector despite gold's strong performance. Based on market-wide optimism, Peter mentions the gold sector's unusual lack of enthusiasm despite strong fundamentals. Gold stocks remain heavily corrected but offer considerable upside potential. Keep in mind that gold stocks are likely to run their own race as market breadth improves and market participation grows. As a safe haven asset, gold is cherished and sought after whenever there is uncertainty in the market. This uncertainty can come from a number of sources, from economic meltdowns to geopolitical tensions and even elections. This makes gold mining stocks ideal in specific scenarios because they might soar even when the market might be bearish, or in some cases, even crash. Right now, the momentum is waning, and the stock is already quite overpriced. However, if the gold prices keep going up, it might allow the stock's bullish momentum to carry into the following year, in which case, you can accumulate some good returns. Let's get back to the interview.
I mentioned that gold had a good week, was up almost 4%. Gold stocks were up a little bit over 4%, but considering how much they crashed, that was a very subdued move. In fact, the GDXJ on Friday was actually negative. Gold was up like $45 on Friday. That's a very strong day. And the GDXJ, which is, the smaller gold stocks, although it's not, it's supposed to be juniors, but it doesn't really have the real juniors. But, it has some, mid-tier companies that are smaller than the large cap of the GDX. But it was negative on the day. It should have been way up. In fact, I mentioned that gold itself is only about 2.5% below its record high. Yet the GDX is 13.5% below its high from a couple of weeks ago. And the GDXJ is 14.5%. Both of these indexes went into bear markets. They were both down more than 20% in about a week and a half, based on the 8% decline in the price of gold. I mean, completely ridiculous. Every market, look at the euphoria. The stock market keeps going up. Positive week for stocks this week. All the indexes, solid gains for Bitcoin. Wild, euphoria there. It's like the only sector of the market where people aren't excited is in the gold sector, right? That's the only place you have fear. Every place else you have greed, because a bear market in a bull market, when gold is that close to its high, and now here we are within 2.5% of a record high. Very good chance gold will make a new all-time record high in dollars next week, if not next week, maybe the following week. Yet these gold stocks have a long way to go now to recover. Not just from a correction, but they had an entire bear market. That's how worried, that's how much fear there is in this market. There's no confidence. in it, which is one of the reasons that you should be so confident. Where other people are fearful, that's where you can be brave. And when other people throw caution to the wind, like in the overall market or like in Bitcoin, that's where you need to be fearful.
Peter Schiff's confidence in gold's future price is rooted in his long-held view on the risks of excessive money printing and inflation. With gold nearing record highs and junior mining stocks lagging, do you see this as a buying opportunity, or are other factors influencing your investment strategy? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.